Good evening. This is Ken Long from Tortoise Capital Management. It's August 4th, 2009. I want to do a quick review of an intraday trading technique today in Alcoa called the Ready, Fire, Aim technique. You can see this is indicated by the file name rfa20090804aa, and that stands for Ready, Fire, Aim technique. Year is 2009. The date is August 4th. AA is the symbol. So we're looking at Alcoa, symbol AA, on a 5-minute chart over a 1-day time period. Now, Alcoa is one of our favorite trading targets. It's low price. It is high volume. It's a great company. It's strongly correlated with commodities and basic industries and basic materials, and it moves in powerful swings and has high enough intraday volatility that it is a suitable trading target. Plus, my sister-in-law works there, and she's great, and it's a great company. So I'm always interested in Alcoa, and there are times when I will stalk it. So the dotted line indicates this is yesterday, this is August 3rd, how it closed. The dotted line means going into the day I am always interested. We knew from the daily report that the market has been reversing its gaps 70% of the time, and because Alcoa is strongly correlated with SPY, like all the Dow 30s, anytime I see a gap down and then a harsh sell-off, and then with long tails on the 5-minute candles followed by a doji and a green arrow, I'm always interested in a morning hook. Now, I couldn't trade this morning because I had a morning meeting. I hate when work intrudes on me. But when I came back from that meeting, what I saw was gap down, sell off, morning hook, a nice sharp move. That's one I would normally be trading. But it pulled back to about 1250 and then made what we would call a shelf. Very narrow range and orderly behavior, and that lets us believe that that we have something like a support level in here. So after I see the morning hook and about a 33% pullback, now this solid blue line indicates that I am now stalking it. As you can see, this is the moment. So I'm interested all the time in Alcoa. And then when that price behavior happens, I'm now interested in it. So when I'm interested in it, the very first thing that I do is draw the line that says, this red line, says at what price do I believe that this shelf or this congestion area, this support level, has been violated. So I'll go a nickel below. So that's going to be about 1245. And then what's the first price that tells me that I'm breaking out of this zone? So it's going to be a couple pennies above this. It looks about 1250, maybe 1252. So I can actually trade this with about an 8-cent trailing stop. So if I get this move, I can install this. But I'll typically just go ahead with a 0.1 trailing stop to keep it round and to keep myself from getting too large of a position size. So I first draw my interest line, or my stalking line, my red line. The next thing I'm going to draw is my entry line. Then I'm going to draw these purple lines, and these are price levels where I would not be surprised to see hesitation. And so and I call these I targets, or the initial target, in the same way that I call this stop loss here the initial stop, or the I stop. So draw these two purple lines. Why? Well, this one was a congestion area from yesterday, and I had a hard time getting above that. And then this one looked like a where it closed, and that was the gap that it might be trying to close. So it wouldn't surprise me to see price get to there quickly and then hesitate and start rolling over. If I see it happen and it starts rolling over, then I'm ready to get out of that position. So we get the entry out of this congestion area. The price moves up in an orderly fashion. At this yellow line is the place where I'm going to move to no lose. and no lose is when I'm going to raise my stop from that initial capital preservation stop up to my entry, so that the worst thing that happens to me after this yellow line is I break even. So we had a powerful move up. We moved the stop to no lose. It hits these two potential resistance areas and blasts right through it. So at this point we know we're going to have about a 3R win on our hands, because if this area represents initial risk, we're about 3R to the good right about here. It gives us another 20 minutes of gains, gets up to 1289. I think it actually got up to a little over 13 later in the day. But in this first burst, it gets to 1289, starts selling off harshly, and get out at about 1280. And so what we have is a move from 1250 to 1280. By the time we exit, that's a 30-cent move on 2,000 shares, with about 5 candles times 5 minutes, about 25 minutes of open risk, and then a return of a little over 3R for that morning work. So that's the ready, fire, aim technique. It's a combination of understanding the behavior of Alcoa, appreciating what the market was going to do with the gap reversal, which is what we saw here. Looking at initial buying interest as morning hook, a orderly pullback, potential for engineering a very tight stop, moving to no lose quickly, being grateful for the gift when it blasts through our resistance areas, coming up here to a 3R and starting to see some profit taking. That's us taking profits too, and so we're willing to take 3R for about an hour's worth of work this morning. So that's the ready, fire, aim technique in Alcoa on August 4th, 2009. Thanks for your attention.